Hello and welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and I'm joined as always by my co-host Nick Ponte. How you doing, Nick?
Yeah, I'm all right, Stephen. Good to see you. Good to catch up again. Another podcast this week. What have we got on today?
So this week it's just the two of us. We have got no guest this week. We're going to talk about a subject that quite a lot of people ask about, and quite a lot of young, inspiring investors that kind of come into the property market think of these golden goose properties, like where you leave no money left in a property deal. Now, 5 to 10 years ago, these things were quite common, and most people could build their portfolio by leaving no money a deal. Now they're a bit rarer, but we want to talk about today: do they still exist? No, what are they? Do they still exist, and why they become more difficult to get?
So is this different to? So I'm counting on you for this because I know you're far more active in this strategy than me. I would like to do it, but obviously the market in Glasgow is quite very competitive at the moment.
Because you've got more money than me, Nick.
Aye, that's it, mate. So the no money left in property, that's different to no money down, obviously. So let's just go into it in a little bit more detail about what exactly we're talking about here.
So yeah, no money left in property deal is where you buy a property, you refinance it, and you add the value you renovate it, you add the value through the renovation, you buy it right in the first place, and then when your new revaluation market, when you get a loan to value mortgage is 75% loan to value, you get a mortgage released, and basically the money that you get back out pays for all your costs, your purchase costs, your ADS, your legals, your renovation costs. So basically the properties cost you no money to buy.
In effect, are we talking about the buy, renovate, refinance and rent model, the BRRRR method?
Yes, but we leave nothing in it. The kind of golden goose, the golden egg that's an infinite return on investment that costs you nothing to buy. You leave none of your own money left in it. So any rental income that you receive on positive cash flow is complete infinite return on investment.
And not so long ago, it was probably quite common that people were actually getting all their money back out and more, wasn't it? Do you know what I mean?
Yeah, it was. Aye, 10 years ago, these were very common. The market was recovering from the recession, so the supply and demand wasn't there like it is now, and the market was a bit depressed. People were taking a lot low ball offers for their properties. Now the market's on the rise, the economy is doing well. It's reflected on how difficult it is to find these deals at the moment. Touch on some of these aspects as well, of how it's so difficult to find these ones, because the other thing as well is that it's kind of the government attacks on landlords. The introduction of additional dwelling supplement that was 3%, it's now been put up to 4% in Scotland now. That's an extra fee that investors have to factor in to their purchase price as well and their costs.
Well, I think obviously the competition is a lot tougher now to get these deals. There's obviously the buy-to-let market itself is growing at quite a fast rate as well. So a lot more property investors coming in. We've got people coming from abroad investing in Scottish and UK property. All these factors, interest rates at the lowest they've ever been. So it makes sense, as an investment for buy-to-let. You've now got talk of Lloyds and John Lewis getting into the buy-to-let space as well. So all this flood of investment in is obviously causing property prices to go up, as well as the general mainstream market, which is obviously making it harder for us to pick up these deals. Plus, you're competing with the likes of first-time buyers again, who are well back in the market, who quite often, they're not looking to make a profit like us, so they're quite happy to go in and pay in excess of home report and things like that.
And we have got a supply issue as well through just going through 18 months COVID lockdowns. There's a huge supply issue. So you're right. You've got all this competition. You've got all these investors. Interest rates being at such a low point that investors are coming into the property market as investments. It is making the supply and the demand thing hugely outweighed and not in our favour.
What would be a typical, give me a sort of typical deal that you've done in the past? Then have you done one that you've managed to get all your money back out plus more?
Yeah, I've got one that I can share that was kind of a real one that was plus more. But one I just refinanced last week was actually it was easy numbers. The purchase price was 42 grand for a 1-bedroom flat in the city centre. The renovation cost was about 14 to 15 grand. So adding my ADS, my legals, the refinance value came back last week at 80. So that released me a mortgage at 75% loan to value, 60 grand. So I got all my money back out pretty much on the button. I think I might leave a grand in it. So it's there or thereabouts. I no money left in deal, but I've got a good one where I've managed to, a few months ago, managed to get all money out plus a good bit of profit as well.
And that's amazing. In this market, that is absolutely amazing. But so whereabouts were these deals again?
So these ones were in Aberdeen. Now I've not added to my own portfolio in my normal location, which was in Dunfermline and Fife, for probably 5 years, because of the issues we're talking about right now. And it's probably worth touching on why we look for these deals. Now, if you want to scale up a property portfolio and you leave £5,000 to £10,000 in each deal, now if you want to, if just say you want to hit 20 properties, now 20 properties is somewhere between, what's that, 100 and 200 grand capital you have to leave into these deals before you actually start taking, profit from your rental income. So this is why these deals are so important when you're looking to scale up a property portfolio. And I was never one for leaving money in deals. If I did, it'd be 1 or 2 grand, and knowing that it can come back out the rental income quite quickly. But scaling a property business up at that level and trying to get these amount of properties in a year, you've got a big deficit if you leave. If you leave much money in any of these deals, you've got a huge deficit. So it's important to try and get these deals. If you want to scale up, like some people might want to have a handful of properties or add to their portfolio one a year, and the money that they pull back out in rental income gets that money they've left in the deal. Or just say it was 5 grand and they make 5 grand profit on the rental income, then they can get that money out within the year or the 2 years if that's their pace at which they're looking to acquire property. But if you're looking to scale up and get 10, 15, 20 properties in a year, you've got to either have a huge amount of capital behind you to factor in this deficit you'll leave in, or you have to get these no money left in deals.
What about timescales then when you're doing the refinance as well? Because it's good to touch on that, in terms of releasing the getting that remortgage and stuff like that. You still got to wait 6 months then.
So yes, typically you used to have to wait 6 months between purchasing it, whether it be cash, a bridge, doing your renovation, renting it out and then getting your refinance. Typically you have to wait 6 months. But there's a couple of lenders that have came into the market the last 6-7 months since lenders have got back after it, since COVID. Now there's one lender, Paragon, were really, really good because, and apparently what I heard from a broker was that Paragon were one of the first lenders to close the doors once COVID kicked in. So they feel like they've lost out on a lot of business, lost out on millions of pounds with the business by closing kind of too early. So they come back to the market and they kind of ignored the 6 month rule, which isn't a set hard and fast rule. It's something that lenders started to follow a few years back, and a lot of them followed suit. So Paragon are not allowing that. So what I've been doing with a lot of these deals that I've been leaving no money in is buy in, and as soon as you're starting the renovation, starting the refinance process, knowing that it takes 6 weeks. So within the 2 to 3 month period, you've got that money all back out the deal. So you can actually scale a lot quicker by using these no money left in deals.
Oh, I mean, that's a great wee tip for the listeners then.
But yeah, but that envelope might not last forever, and as you know, the lending kind of criteria changes quite often in property investment. So yeah, that window's open at the moment, and I've been kind of trying to capitalise that in my own stuff recently. But whether that's going to be open for much longer, I don't know.
Right, and let's talk about obviously post-COVID and stuff like that. Surveyors coming out, because obviously what happens when you've done the renovation works and you're looking to refinance and get a mortgage at that higher value, then usually what happens is the lender will, they always will, the lender will send out a surveyor to do the valuation, right? To make sure that their security is safe, basically, and check the value of the property.
And that's a really good point, Nick, because some people kind of get that twisted when they kind of think about their home report value versus a surveyor's value for the lender. Now, you hit the nail bang on the head there. If you're selling a property in the market the way it is right now, if you or the estate agent are instructing a surveyor to come out and do a home report, they're going to be erring on the side of optimism and valuing it up the way a little bit more, because they know the market's hot, they know it's selling. The seller's obviously motivated to push the maximum they can get from their property. So if your property was bordering on the 90-95 grand mark, you could probably get that pushed to 100 grand right now, and no one would ask any questions. The property would probably sell for 100 grand, and it's been inflated. But like you said there, once you're refinancing the property, the surveyor's never instructed by the lender. The lenders want to obviously protect their security first and foremost. So which way they're going to value the property. They're going to err on the side of caution and go down the way. So that's something that people need to realise when they're doing this strategy, that might not get the same valuation you would get if you were putting a home report and putting it on the market. The valuation might be slightly less than you're expected, but you have to kind of factor that in by doing your proper due diligence.
And how have you been getting on then? Because you've obviously been doing quite a few of these refinances this year, after lockdown, etc. So with the actual valuations, how have they been coming back? Have you had any low ones? Have they been decent? Have they been what you expected? Or
they've came back. They've all came back higher than expected. But then I'm one of these people that I hate when I hear investors talk about it's just a rental. Like that fucking term drives me absolutely bonkers. Like, oh, you've seen you've seen my refurbs and my rental properties. They're as good as most people's flips. Like, I'll do everything. I'll leave a high standard of product. Because I see, if you're renting a property, why should you have a substandard condition of living because you're renting? You should have just as good as anyone else. And I always feel like once that property is renovated to a decent standard, it attracts a higher valuation, it attracts a better quality tenant, and tenants seem to look after the property better because it's brand new and it's really, really well done, that they just seem to get the tenants to look after it. Obviously, there's going to be the odd occasion where things will get wrecked, but I hate when people use that terminology, and a lot of the guys in my mass community, we try and raise that standard of rental properties all the time and make them stunning. And I think this is what's actually helping with these valuations that are coming back, because the one that I just explained on Summerfield Terrace isn't a really good street. It's quite a down out street. I expected 75 grand for the valuation. So to come back at A just shows that the renovation was done to a decent standard. No stone was left unturned. The product of the product.
Yeah. No, that's good. I mean, no, I've seen your refurbs, mate, and you even give gold taps to your tenants. So, like, hats off to you. Do you know what I mean? So, I think that there's kind of like mixed reports out there at the moment. And so some investors are reporting some down valuations, and others are reporting that they're getting over. So, I think, to be honest with you, I think a lot of the time it's just your luck at what surveyor you get out. Some of them can be a lot more cautious than others, and if you build up a reputation, maybe with one or two, and you see the same ones on the circuit, and again, then that can play to your advantage as well.
Yeah, I got a down valuation recently, but it was due to a couple of issues. When I bought the property, I bought a 1-bedroom flat, and it was a 47 square meter 1-bedroom flat from the home report from the sales particular. When I went to there's a difference in a 1-bedroom flat at 47 square meters, and the other ones that are in the same street, they're about 38, 39 square meters. And so when I carried out the renovation or my due diligence to get my valuations, I predicted, because it was a 47 square meter flat, that would get 110 grand end valuation. So when the surveyor come back out to do the refinance, he called me back 2 hours later and he says, "Can I come back and check a couple of measurements? My calculations come back at like 39 square meters." And I was like, "Really? I've got here from the previous home report, it's 47. He says, "Yeah, so have that. Let me come back and check it." So he came back and checked it, and he goes, "No, it's 39. The previous surveyor was wrong." So I've done my due diligence based on the surveyor taking his size, his measurements, and putting out a 47 square meters flat, and it's actually 39. So when the valuation came back, it rightly so came back at 100 grand. So that it was different. So yeah, they don't always go to plan. But I've had a good one that went well over and above what my expectations were. And I was in Aberdeen. It was at the top end of Union Street, and I purchased the property it was a 1-bedroom flat for 52 grand. So by the time you spent your ADS and legals, you were probably an extra 3 grand on that, so actually 55. The renovation was quite a big renovation, but I factored in my cost to the investor, which was 25 grand. So that's taking you 70 grand cash all in. So obviously getting a valuation of around the 100 grand mark was going to get all my money back out. And I was predicting between that and 110, but the valuation came back at 135 grand. So it was all money out plus, pretty much 30 grand of profit as well.
Wow, that's pretty powerful. And some people would say, well, why would you take that? Why would you take that extra money? But I'm thinking to myself, well, that's free money, isn't it? So like, you're pretty much getting that. Well, it's not free money because you're obviously paying interest on it, but the interest rates are that low anyway. You can use that 30 grand to obviously go and fund another purchase.
Yeah, well, the way I'm scaling up the company in the portfolio, I'm not taking an income from that one. So that the extra 30 grand took into consideration the £5 that I left in this one, or the £3 I left in this one. So it basically just came back as like the buffer on the other purchases. So when you're leaving money in other ones, this extra 30 grand just helped with the kind of the negative deficit of building it up. So yeah, you win something like that. I mean, that one's a freak one. That's probably the best one I've ever kind of come across, where you're getting all your money back at plus 30 flipping grand almost. Like that's
I think that's an important point. Let's just say to people, we're not trying to basically say it's all as easy, it's all plain sailing, and the next deal you get, you're going to get a check through the post for 30 grand. You know, like that ain't happening. But it just goes to show. I mean, like Stephen's out there doing the do. You can go and follow his progress, you know, on Instagram, and he's doing the deals. So yeah, let's just talk about how important it is at the moment, especially in this market where there's like huge supply issues and materials, labour costs are crazy. Let's talk about how important is it to do your due diligence and do your numbers right at the start before you even do the deal or purchase the property, because that could be where you could go potentially wrong here, is it, in this market?
Yeah, that's it, mate. Material prices are shooting up 70%. You know, labour's becoming more and more expensive. So if you've done your numbers based on, you know, a 15 grand refurb and it goes to 20, like these are the things that you say that end up being no money left in deal. Now, if you're wanting to buy one or two properties, then that's fine. These things can be swallowed up. But if you know the way the buy to let property investment market's going, in my opinion, it really needs to be scale. You can't. I think long gone are the days when you have one or two properties and you rent them out. If you're not doing this in scale, it's really not worth your time, because you've got to factor in ADS, your tax changes, clause 24, all the extra compliance. Like unless you're doing this in a bit of scale, I think one or two's not going to work. So if you're missing your due diligence point and leaving the money in each deal, you won't be able to scale up that quickly. You'll kind of come to a stall quite quickly in your journey.
Yeah, so I think this podcast is going to give a little bit of hope to people who have not got, you know, huge pots of money there. Basically, they might have saved up, you know, 20, 30 grand to get started. This is the best way, the best chance you're going to have of building and scaling a portfolio quickly. But, you know, that's not the only way, because as I've kind of like explained on the podcast just recently, you know, I'm finding it very difficult to find deals like this. I was a huge fan of the BRR strategy, and just lately I've been finding it really difficult. Now you're at a kind of dilemma. What do? Do you keep hunting and putting all this time and effort and rejected offers and closing dates and all the rest of it into trying to find that perfect deal that you're going to get all your money back out, or do you just, you know, do you sit in the sidelines and do absolutely nothing, or else do you, you know, go and just buy property at full market value and then just ride the wave of property prices going up? And that's what I've decided to do, because I just don't feel that I've got, you know, the network of people bringing me deals. I can't find the deals. So it's not always going to be this strategy is going to suit everybody.
Mm-hmm. And that's right, mate. You touched the nail on the head there as well. If these deals don't come along, they don't fall on your lap. It requires a huge amount of effort, a huge amount of work, and a lot of people won't put in that consistent hard work and effort over a long period of time to get these deals, or they've got busy businesses or whatever. But yeah, the other way to get these deals is to hook up with sourcers, get sourcers to try and bring them to you. Now, I suppose on the flip side of that, because these deals are so rare, most sourcers maybe want to build up their own portfolio and maybe source on these deals as excess deals that they can't take, so they're willing to sell them on. So that's maybe making it probably like you're doing in Glasgow, and I could probably find it a little bit more difficult, because guys are going to keep these ones for themselves rather than passing them on.
Yeah. And so I know one of the big questions that the audience are going to ask is, so how are you finding these deals, Stephen? Like, how are you still able to get these deals?
Looking as run down, as tired as I'm looking in the last 18 months, probably is the biggest thing. 90 hours a week working, sourcing out there, social media, building relationships up, meeting with people, telling people what you do, putting it out there what you do. There's a couple of deals just came in recently from estate agents. Now, most people are complaining that estate agents are not bringing deals to them or even answering the phone, but everyone's not in the same position to sell a property on the open market. Wait, some people want it sold quickly. Some people you can't even view it. Some people you can't even get a home report in it's such bad condition. There's a huge amount of stock out there that's lying run down with people that don't know who owns it, from executors. Like, there's so much property out there. it requires a lot of effort and a lot of work to go out and do it. And you know what it's like as well with these things, Nick. Like you always look for a while, and then they come around like flipping buses. A few all at once.
So I am one of these people that sometimes says, I struggle to pick up deals. There's no deals. Now, Stephen's a prime example of showing you here today on this podcast that there still are deals out there, and that you can get these ones where, you can refinance and get all your money back out. But again, let's just say if you've got people in the main cities, Glasgow, Edinburgh, Dundee and all that, are you still hearing people doing these deals in these cities as well?
Yeah, they're still there, but I think they're definitely more rarer. They're definitely there. I think, and it depends on your strategy. And like you say, if young people are starting out and they've only got that pot of 20, 30, 40 grand cash to go into property, like you could do these no money left in deals. This is what's going to keep you scaling and keep growing. But like you touched on there, Nick, if over the next, I've seen a lot of reports recently, over the next 3 or 4 to 5 years, they reckon that property prices are going to rise somewhere between 20 and 25%. So if you are buying something at market value, you're pretty much leaving no money in if you want to refinance in 5 years and get that 25% back out. It might just take you that a bit longer. So I think it's being aware of what your strategy is and what cash you've got to play with and what you're wanting to leave tied up.
Yeah, and I'm cool with that kind of long-term goal as well. So I've kind of like, I'm at the point where I've got, 10, 11 properties now. So, obviously I want more, but I'm quite comfortable that it's going to take me a little bit longer now. And I'm not really that desperate, do you know what I mean? But if you definitely are starting out, then to get off on a good start and get one of these bagged is definitely going to give you a bit of momentum for sure.
And you're at a different stage in your investment career as well. Like you don't want to be, someone starting out to get these kind of no money left in deals. Probably, I'd say in Glasgow, definitely. You're going to have to be getting your hands dirty. You're going to have to be doing a lot of the renovation work yourself. You're going to have to keep these costs down, stripping out, painting it, doing anything you can do to keep the costs as low as you can. Whereas someone like you that's maybe going to go and outsource the whole renovation is going to pay a premium for it. So that's making you going to leave money in a deal as well, even more.
For sure, definitely. So there are a couple of examples there anyway. And like we say all the time, if you want to follow us on Instagram, stuff like that, you can see what we're up to day to day. What else can we kind of learn from this? Should we just conclude here? We want, obviously the title is "Do No Money Left in Property Deals Still Exist?"
So yeah, they still exist, but you have to work a lot harder for them than you did, some years back. They're there. They just require a lot of work. They require a lot of practice on the sourcing side of it, and they require you being creative for your renovations as well. When I say being creative is getting the cost down as low as you can, but still producing a high quality product to get your valuation where it needs it to be to get all your money back out. If you scrimp on these renovations and your valuation doesn't come back in, then you're going to leave money in the deal. So it's about finding that right balance, spending the money right on the right areas of the renovations to get the valuation back where you need it to be.
And you think, obviously, with more and more sort of education and property education courses, more and more people getting educated about this sort of stuff, that's obviously driving the competition as well, isn't it? So, there's more and more people out looking for the same thing.
Yeah, possibly. Yeah. And a lot of them are there. It's how you can figure out that the value. Like the one I told you about there that I got the 30 grand back out of it, and that was a 1 to 2 bedroom conversion. So you didn't just do a standard renovation on the property, renovating as a 1 bedroom and releasing it at 95, 100 grand end value. I raised the valuation by creating a 2nd bedroom. So it's being creative as well of how to find the valuation on your renovations. If you were looking for the low hanging fruit, like the simple renovations, they're quite hard to find because everyone can kind of spot them, see what it could be worth when it's finished. So yeah.
And have they got to be off market? Would you say in this day and age and current market that we're in, would you say they pretty much need to be off the market to do this? Not
necessarily, but yes, it's a lot easier if they're off market. I've had a couple of deals brought to me by estate agents through in Glasgow, but they've brought to me they've had the leads come through from Dunfermline way through from where I live. So they've not had as many contacts there. They've been kind of properties that were a bit difficult, and they knew that if there was someone there that could buy them and not do what they say they're going to do, then they'll bring it to me. So that's worked out a couple of times, and that's kind of off market with a estate agent bringing them to you. But yeah, I think definitely off market right now would be the way to go. And you can do that by telling people what you do. Put it out on social media, talk to friends and family. Just talk to work colleagues, tell them what you're looking for. You'll be surprised at what pings up on these conversations.
Definitely. Well, hopefully that'll give you some inspiration, guys. I mean, we are not, trying to say that it's all roses and it's all easy, plain sailing. We're giving you the real, facts here. It is doable, but it is difficult. If you are prepared to put in the work and you've got the time to go out, network, viewings, make connections, do marketing, all this stuff, then I'm sure that you can still pick up these deals. And if you go over to our Facebook group as well, there's still people, posting. I would say at the moment, not probably as much as when we started out the group a couple of years ago, but there's still people getting them.
Yeah, there's a few recently been posted in the group. I think Niven posted one. I think Mark Shanta posted one as well a couple of months ago. So there's been a few people posting these deals in the group. So they're existing and they're happening all over the country. But they're definitely more difficult to come by. You have to be prepared to put in a hell of a lot more work, or be willing to leave some money in the deal if that's your goal.
Yeah, nice one. Okay, guys. Well, thanks very much for listening today, and we will see you again next week.
Thanks a lot, guys. Cheers.